Alright, folks, welcome to this week's Forex commentary and market review. And to the folks that will just be listening to me for the first time this year, Happy New Year. And I think before I continue, I'd like to encourage everyone to, to like and subscribe to this YouTube channel and share with friends. I mean, share this content with friends, and so that more people can see my stuff. Because your like means a lot to the growth of my channel, and your subscription does too. But it's quite easy for you to do it because it's a click of one button. So okay, we'll just return back to business. So this is dollar index 12 months time frame, and if you're coming into this video, I would counsel that you actually watch last week's commentary because I spoke exhaustively about dollar index, my expectations, and how I think the markets may play out for the year. And if you've not done that, okay, I could do a brief little recap of the things I said. You know, I said dollar index is bearish on the yearly time frame. That's a 12 months chart. I think DXY is bearish. I think um, everything aligns, including data points that dollar index is bearish. And in terms of price action, okay, we have a bearish order block on DXY, and markets are currently rejecting off of this fair value gap, or someone might point out to this mitigation block or the other block, right? So I think markets are trying to return into a near-term premium, and that premium could be the last down close candle. Sorry, the last up close candle prior to this move last year, and that's the other block. But last week, this was what I highlighted, of course, for YouTube commentary and stuff, because I was trying to be nimble on objectives and stuff. But that's for YouTube. But personally, I think they may likely get to the bodies of the candle because of some levels I'm watching on the monthly chart. Now, how do I think they're going to get here? And that's where the whole narrative we started to build around subordinate time frame, that lower time frame market structure. When I mean lower time frame or subordinate time frame, I mean time frames lower than the 12 months chart. Okay. We went to 6 months. We talked about the fact that we had a closing basis inside this candle for 6 months, the second half of 2025, which confirmed that we were in consolidation throughout the second half of 2025, and it made price action extremely difficult to read and also extremely difficult to trade because markets were essentially in a sideways consolidation. We also talked about varying reason how we think, or I thought the markets could play out, because they don't have to trade into the 12-month order block for downward movement. They could open up and probably go this far, or maybe make a retest of this candle. This candle could, it's a mitigation block. This candle here, it's a mitigation block. So they don't necessarily have to trade up here, but we said we're going to take it, one PDRA at a time. We're not going to hard press on these levels because we have a longer term perspective, and we think the market could favor the longer term perspective instead of following the pathway we're defining for how they are going to deliver into sell side objective here, because long term I think DXY could likely return here, at least trade into sell side here. So for the 3 months chart, you'd see we have consolidation. We have swing low here, this candle, the higher low to the right and the higher low to the left of this candle, making this candle the draw on liquidity. Okay, so we think the markets are likely to draw here, but this is the 3 month time frame and it's not the monthly time frame. And when you look at the monthly chart, it's kind of like skewed a bit because we can't really define if the run above this high is a shift in market structure or a total swoop, because you can see the bodies of the candles they in fact didn't close above this high. And that's why when we're talking about dollar index then in November, I said we wanted to see November's candle. When November's candle was trading above this high, we said it would make more sense if we stay on the closing basis above this high, and which would validate a change in the state in delivery, and then we can aim for this fair value gap here, which I still think the market could reach from, and that's why we have the borders of this candle on the 12-month order block. So now down to the monthly time frame. We said because of market structure, we evaluated market structure from dollar index, we evaluated market structure in Euro USD, and we saw the varying possibilities that could happen in price action. I mean, we are seeing that dollar index had or has currently a swing high after a run on liquidity here, which could make this level high resistance, and market could fail to run it and just maybe return into a premium and sell off. But what I was eyeballing was this, we have an inversion fair value gap. Okay, so I was saying that we could see the market respect the inversion fair value gap and tank, or we're going to see how market interact around this inversion fair value gap. So I'm going to take us to lower time frame, and we're going to study how the market played out last week, and how personally I navigated price action with the private community on Discord. And so this is 12-month inversion inversion gap, and mind you, there were lots of if, buts, and maybes on price action, and it's the first week of January, and how I always say, the monthly candle validates the monthly buys. And in January, we're still bullish on dollar index. Personally, I'm bullish on dollar index, but my definition of bullish is hinged on how I think the market should play out on the yearly time frame. Meaning, I'm thinking the markets are going to rally into the 12-month order block here and sell off. Okay, so it would be like this is consolidation from the second half of 2025, and a run against the higher time frame buys into a level on the 12-month time frame, and then the delivery of the yearly range. That's how I'm conceptualizing all of these things. Now, I could be wrong, and that's why I'm not trying to press on anything. Okay, I'm only going to take it a single week at a time, right, until we get to the levels we think the markets are going to trade into. So this is the weekly chart. I have this is the monthly inversion fair value gap. I talked about the fact that we had the last commentary of the year, we said we're going to see markets draw into here, and I also was thinking that this could be an OTE into buy side, because we have buy side liquidity resting above these highs, which remain untapped from this low from this low to this high. This is 61.8%, the golden ratio Fibonacci, and it's discount, and it could potentially mean an OT into buy side liquidity here, and potentially we could see markets trade into this level here. So now you see we're currently above the monthly inversion fair value gap. So I'm going to annotate this as the bullish inversion fair value gap, and it's going to take this color, and yeah. So now I'm bullish on dollar index, and we're currently above the monthly inversion fair value gap, and we have a change in the state in delivery on the weekly time frame. Although currently we are currently at resistance level. Okay, this is the other block, or this is the breakout, whatever you want to call it. It's a breakout if you reference this down candle. It's an auto block if you reference this up close candle. It's just as simple as that. There's no need to stress. And this is marking objective. Okay, objective of last week's range. You know how I always talk about the fact that each weekly ranges are capped, and that's why we use levels to define the draw on liquidity. So when market gets to this level, we want to collapse our trades, or we want to be waiting for more data points, right? So this is the high of last week. We have the monthly order block, and I'm thinking dollar index is bullish because we have a change in state in delivery, and I think DXY is bullish off of high time frame price action. Okay, I'm thinking they could likely draw here, but for the fact that we're currently trading above the monthly inversion fair value gap on the weekly time frame. Okay, it's, you see how I'm trying to lean on price action as well as leaning on my intuition. I'm leaning on both. Okay, while I have, I have to predict where the markets are going to go, I have to lean on candlesticks to, clear the pathway to define, if I'm likely to be correct or if I'm likely to be wrong. All right, so this is the inversion fair value gap, and for the delivery of this week's range, which I think may be bullish, which is likely to be bullish, not solely based off of dollar index, but based off of correlated pairs like the majors. We have Euro USD, Pound, and USD JPY. Okay, all these are correlated pairs. Sometimes if DXY isn't clear enough, you look at correlated pairs to see what market structure is doing outside of dollar index, so that you have a much more globalist perspective of the situation around the dollar index. So I think we could see markets return into this inversion fair value gap. It's not compulsory they return, but because of markets is traded into resistance on the weekly time frame, I think the early portion of this coming week could, return into the range a bit and find support likely at this level here. I'm going to have it on all time frames, especially for our time frame, and find support somewhere here, and then we begin to expand. Now, what validates our expansion would be the 4-hour time frame change in the state in delivery. Okay, when we have the 4-hour time frame change in the state in delivery, after markets trade into it, if markets would trade into the inversion fair value gap, then we can begin to look for longs on DXY, targeting buy side liquidity here. So on the daily time frame, this is what we have on DXY. We have this monthly inversion fair value gap. We have this gap here, and I'm thinking markets could make a retracement because we've had 4 up close days, okay, on the daily chart. So I think it's poised to make a retracement, or maybe it consolidates on Monday. All right, and Tuesday returns into this level, and then we get validation, and probably Wednesday gives us ideal setup, or probably Tuesday New York gives us ideal setup. I don't know, okay, but I'm trying to focus on what levels and candlesticks would be saying. If we talk about last week's trading, you can see how the markets ran into this breakaway gap. Okay, I think I would have to take this one off a bit. Okay, so how markets ran into this breakaway gap, and you recall from the commentary I said the only thing I know for sure is that markets are likely going to draw into this breakaway gap. I absolutely do not know if the markets are going to make a continuation for sell side or establish a new trend, or okay, it's kind of like it's relative, because if we are looking for from this perspective that we're previously bullish on dollar index, we could be talking about continuation here. But if we're looking at the fact that the monthly time frame was showing bearish price action, we could also be thinking that selling up from here is also a continuation of this this current ongoing trend. So anyways, it's just perspective. I'm sure everyone listening already understand the things I'm trying to communicate. So we have a run on liquidity here, we have a breaker, we have a change in the state in delivery here, and we have a change in state in delivery here, and Thursday bullish. Okay, I was bullish on Thursday because after I saw this closing basis through this candle, I was bullish on Thursday, and I was looking for longs on the XY, but I settled for USD JPY, not Euro USD, because on price action, even on dollar index on the lower time frame, was just too efficient and choppy. So I wasn't interested if they were going to run any internal liquidity. Okay, so I was bullish on Monday for a run into this breakaway gap, and I waited after Monday's trading, and you can see the heavy rejection. Now, this sort of rejection can trick traders into thinking dollar index was bearish. I simply had to wait, okay? And the things I saw during the New York session on Tuesday was we had a run below this low here, and there was a change in the state in delivery on the 4-hour time frame, and when I saw the change in statement delivery during the New York session, I could not think, because I initially suspected DXY was going to be bearish, and in fact the early portion of Tuesday was in fact bearish. But heading into New York session, I was no longer comfortable being bearish on DXY because of this sort of price action after I run on liquidity here. And not just that, the things I saw in price action that hinted me at, staying away from, participating on dollar index was the fact that, before, after Monday's close, I was thinking the markets were going to, trade into this volume imbalance first and sell off, but they left this volume imbalance and they took out sell side liquidity here. And after taking out sell side liquidity here in London session on Tuesday, when we were profiling the market, we talked about the fact that market didn't trade ideally into the level they're supposed to trade into, and there was an expansion overnight during the Asian session, and London session took out sell side liquidity on dollar index. So objective has been met from daily perspective. London session is low probability, right? And we waited through our London session, right? We're going to take trades in New York session primarily to go short on DXY, but by after London session we saw the market close bullish like this. After I run on liquidity, the change in state in delivery, and mind you, in the commentary, I was talking about the fact that we could see them run through this daily volume imbalance, sorry, daily breakaway gap. It was the consequent encroachment they sort of used here. If you check the midpoint of this range, they used the 50% of this gap. So there is the other 50% if the high time frame order flow is bullish for them to completely rebalance. So I recalled that thought and said we would likely stay on the sideline. Not likely, we stayed on the sidelines, not likely, please. Okay, because apart from the fact that we were on a streak on the Discord, we avoided losses too. It wasn't easy, trust me. It didn't come easy, because when you're looking at this chart, okay, everyone is in their mind, they're trying to ask you, what are your thoughts on this? Would you hold on to your words, stuff like that. There's a lot of pressure being an educator actually, and that's why the best way to think about this market is looking at it through the probabilistic, or through its probabilistic nature actually, where you see the market for what it really is and all of the possibilities that could likely unfold. So it keeps you in check. It keeps you in a in a neutral perspective, and it keeps you in the frame so that you don't act on impulse, right? So that was the recap of dollar index, and we saw them make a return into the other block, close above this gap, consolidate, stay above this consecutive downward candle on daily time frame, ultimately validating buyers for bullish and for a run through the fair value gap on the daily time frame. And we just settled for USD. So that was recap for last week, and I already talked about what I think the markets are likely going to do this week, owing to the fact that we have a monthly inversion fair value gap now, and the markets could likely make a retest of the inversion fair value gap on the daily or 4-hour time frame. We need a retracement, or we need consolidation that could probably create an inefficiency. Okay, that's if the markets are not going to return here. But then again, there's this level here, this huge volume imbalance. I think the markets could potentially return into this volume imbalance, okay, not sure, but it would make a lot of sense if we can see the market just return here, and probably Tuesday just pokes its head inside here and closes above this monthly inversion gap, and then Wednesday is going to be very, very easy. So it still requires a lot of patience actually. So it's not, because of it's looking now like prices are sort of one-sided. It doesn't qualify impulsive behaviors, because we absolutely cannot tell how they intend to deliver next week's range, okay, until the week starts. So very similar to dollar index, euro USD bearish, coming off of the rejection block. I think they may return into the 3 months fair value gap, this gap here. Okay, that's what I think. I think they'll likely run here, or even if we're seeing a monthly change in the state in delivery. Okay, and this was the contrast between dollar index price action and Euro USD, because Euro USD does a monthly CISD, and someone will ask me, are we not going to buy it because of the monthly CISD? Does the monthly CISD does it not validate the 3 months gap as a breakaway gap? I mean, it's very subjective, because currently, say this was probably the 12 months time frame, maybe it could, but we have a 12-month chart, and the monthly time frame has become a much more lower subordinate time frame. So we are trying to adjust to the narrative of the yearly time frame, and that's why everything on the monthly time frame would become subjective and no longer set in stone. Okay, I hope you understand that. So currently we are objective on the weekly time frame. So I think the markets could make some sort of retracement into the range and continue to the downside. That's what I think. Except maybe I could be wrong, and all of this run into this order block would just mean a continuation for buy side. I don't know. I could be wrong, but currently price action, I think we could see more shorts on euro. And if you make comparison between euro and pound, for example, we have a run through this high, and relative to pound, okay, it's not showing, because the run above this high on pound during last week's trading was met with resistance on euro USD. So there's an SMT between pound and euro, confirming a reversal, I think. So we have this, there's a change in state in delivery, and we have this auto block here, this last upclose candle, and we have this inversion fair value gap. I think if the markets are going to find resistance on euro, I think they'll find resistance at this daily inversion fair value gap. And once, if they make a retracement into this inversion fair value gap and confirm a 4-hour time frame change in state in delivery, which essentially is meant to validate the weekly bias, and that's why I'm referencing the 4-hour time frame CISD, because if we can validate our weekly bias, then we can assume going short on euro USD based off of the 15-minute market shift and all of that. It starts with the 4-hour time frame, then after you can now look for lower time frame setups in subsequent days. So that's what I think, and I think sell side here first, and then we could see sell side here. So I'm running through the commentary, okay, and we have pound, we have SM2 EU, we have the 4-hour time from CISD, we have also Friday return into the other block. So we're just going to see how the market plays out, because we have this daily inversion fair value gap. I would have favored the closing basis below this inversion. So sorry. So we begin looking for a retest of this inversion and sell off, but we already have the narrative already on dollar index, okay? And even if the markets are in consolidation on pound, okay, you can see pound making a high, and because if you check euro pound was bearish early portion of last week, and euro hasn't been showing any strength aside from this sideways consolidation or this retracement. I think euro pound may likely continue lower, I think, and that's why we're seeing relative weakness on euro USD. And but overall, I think euro pound is bullish. But just like dollar index, that's returning into a high time frame level. Let me show it to you. I think euro pound is also returning to some sort of higher time frame level. Okay, euro pound traded into this gap. You can see this gap, okay, and market reaccumulated into discount. That's the rejection block, and now there's a change in the state in delivery on euro pound. Okay, but within the change in the state in delivery, we can see this heavy rejection on 3 months time frame. Okay, what I showed you earlier on was a 6 months time frame. Okay, I think all of these levels are clean, but trying to be very conservative, right? There's a 6 months change state in delivery, and we have this indecisive candlestick. Okay, that could mean euro pound may be likely to return into discount, and I'm looking at this fair value gap. That's what I'm thinking. Okay, although to confirm this would need January's candle to close bearish to confirm that we're going into here, because currently we are sitting at a level on the 6 months time frame, which is the 6 months change in state delivery. All right, so we have all of that, and this confirms a shift in market structure anyways on the daily time frame. And we have all of this, this consolidation into premium, and we have this gap here, this volume balance. I think they could likely run if we are right and bias right to think that dollar index is bullish. I think we could see pound trading to this level. USD JPY is pretty straightforward. USD JPY is just like a bonus. We have this candle here, and I mean we have this mitigation block. Then we have all of this down close candle that traded into this mitigation block. That's the auto block or the propulsion block, and I think no, I think USD JPY is bullish, and I think okay, I still think the markets are going to trade into buy side liquidity here, and above buy side liquidity on the daily time frame we have this huge sell side imbalance, buy side inefficiency, and within the CB we have a balanced price range. So that's what I'm eyeballing. Okay, so I think if dollar index would make a retracement into the range for a continuation this coming week, we could see USD JPY return into this consecutive down close candle for a continuation into buy side. And sorry, so on the 4-hour time frame, this was set up with 2 last week. Okay, I'll just take it out. So we bought the 4-hour time frame oil block here, and so you can see that we have a 4-hour time frame down close candle at the daily order block. You can see the daily order block here. We have a daily order block, and now we have a 4-hour time frame order block here. There are about 2 ways this could actually pan out. We could see the market return into this level, respect the 4-hour time frame order block, and expand. Or if the markets are trying to be funny, okay, they could actually run the lows probably into this gap, then into this breaker here. You can see this breaker here into this gap. But if you ask me, I think because of we have a daily level here, we could see them respect this level easily and rally, right? Except if the markets are going to go into consolidation, which is what I do not know. Now, how do you engage here? Say, how do you know the markets won't take out this low? Well, if markets return into this level and an auto block or a propulsion block forms on this level, I think you can put it into consideration and execute off of that. So, to wrap this up, we talked about gold last week, and we talked about silver. We said a number of things, and for gold, we marked out the level on the weekly time frame. We said this is the auto block. I mean, this consecutive down close candle, and this is the consequent increasement of the auto block. We wanted to see sponsorship to validate the monthly bias, which is bullish. Why is the monthly bias bullish? I mean, we've had consecutive bullish months, so that's why the monthly bias is bullish, and we're expecting the markets to take out the previous monthly high. And on the weekly time frame, we set up a projection of standard deviation, -1 standard deviation of this retracement range, saying the markets could likely gravitate into -1 standard deviation. So off of this week's bullish candle closure, I mean off of level on the weekly time frame, we can identify this, or we can call this sponsorship of the monthly bias, and we'll be expecting the next week to also be bullish. And on the daily time frame, we see the markets invert this daily fair value gap, and markets return into this inversion gap, and they took out I think this one is this low sponsorship on Thursday, validating continuation Friday, and now we have an auto block here on the daily time frame. So we have an auto block here. They could make a retest of it and run into buy side, and more buy side liquidity on gold. Okay, I'm trying to speed run now. And on silver, we talked about the fact that we weren't clear if the markets are likely to make a continuation off of the weekly time frame, because the previous week was bearish. Okay, but then again, we narrowed our attention to price action on the 4-hour time frame when we said there was a run on liquidity here, there was a change in state in delivery here, and they could likely respect this volume imbalance. And we had this trade. And the next thing was we said to validate if silver was going to be bullish, we wanted to see a change in the state in delivery, and the change in state in delivery would come off of, after the candle closes above this consecutive down close candle. All right. So when markets close above this consecutive down close candle, it's a change in state in delivery. So a return back into this consecutive down close candle is confirmation for longs and silver, and we said we're going to aim for buy side liquidity here and the rejection block. Okay, so this is where we had our second entry, or I had my second entry, but the Discord had their first entry on silver, and we missed another entry on silver because there was a daily time frame change in the state in delivery, which confirmed more longs, but I was so exhausted, so I couldn't call this on the Discord, and we had daily time frame change in delivery, and we had our setup here off of this breaker, right? So there was this breaker, and then we turned into daily time frame change in delivery, offering the setup for Tuesday. So we missed that, but we took we got in on, I think that was a London close on Tuesday. Yeah, London close, market returning to this breaker, this auto block breaker, and we had this setup as well. So these were trades we took on Discord, and as well as buying silver on, yeah, buying the auto block on silver. That was on Thursday, because after silver met objective at the rejection block. Okay, I tried to be a cowboy here. This was my own personal trade, and I was stopped out somewhere around, somewhere around this candle, because I was going long somewhere. I can't remember. I can't remember until I go through lower time frames, but that's not the point here, right? So so when silver tried into this rejection block here, okay, we started to see a run into the range. Now, mind you, I allowed silver partake in all of its retracement, okay, because I wanted to see what silver was going to return, or where it was going to return into. And my first, after we saw this bearish candle, there was a high chance that we saw Thursday bearish into this daily OB and fair value gap. So I narrowed it back into lower time frame on file chart, and I referred back to the change in the state in delivery. Okay, that's why the change in state in delivery is very important to the weekly bias. So you can see how the market returned back into the change in state in delivery, and when we got confirmation for longs, we bought silver again. So we had all of the 1, 2, 2 and 3 trades on silver was straight up profit, and also we took trades on gold and on USD So we had very good trades on Discord, and I think I will have to be very nimble so we don't take losses this week. But to be frank, this year shouldn't be about trying to make X amount of money, right? This year should be about making quality decisions, right? Because if you make quality decisions, it's going to translate into profits. So you don't want to chase profit because it's going to hit pressure. You just want to focus on making quality decisions, because if your decisions are actually quality, then definitely you're going to make a profit. And even if you take a loss, it's probably going to be a good loss, and you don't go on a tilt, right? Because it's also very, very important. Once you know how to take very good trades, you need to be able to control impulses. So you don't get too confident, and you don't, start becoming arrogant with the market, not respecting confirmation, not respecting, rules that you would likely respect when you're in a tense condition, right? So I think silver is going to make a continuation this week. We have this down close candle, the auto block. The high of this candle is the auto block on the daily time frame. So we already have the weekly time frame closing bullish and above this down close candle. So you can see it's the change in the state in delivery, okay, and we can see the weekly time frame align with daily time frame price action, because we have a swing low now on the daily time frame, and markets could return. And there's this 4 hour gap, but I don't know Okay, we're going to see what happens with silver, and we're going to see how we navigate price action on Discord. So I hope you found this one insightful. Until I talk to you again, probably in commentary, probably on X, because I'm going to, you know, send in posts on X even less this year, because there's a lot of money to be made, and just focused on making money. I hope you find this one insightful, and until I talk to you again, be safe.